traders at Access Bank expect a repricing on the short end of the bond curve today as the market reacts to the sharp decline in T-bills top rates. Meanwhile, a more active T-bills market is expected as unmet demand from the midweek auction filters into the secondary market. Adamma Mbachu, team lead currency trading at Access Bank, joins me now for an update on the fixed income and FX market. Adamma, it's the last trading day of the quarter. What are we seeing play out here?
Yes, thank you so much for having me. Yes, I'll start with beginning of the quarter. Yeah, riding the yield curve, we saw the yield from 14% all the way to 16% this quarter, coming from the long-term instrument, the bonds. And while on the treasury bills, we saw a bit of upward trend. It started with 6% from the beginning of the quarter and is as high as 11.3%. It touched about 12.9% the last auction and came down to 11.37% this auction. So we have seen the yield trending upwards for the short-term instrument, and for the long-term instrument, we have also seen the yield also trending up from 14% to 16%. But the rate of change is much seen, and the volatility is more seen on the short-term instrument in treasury bills and the fixed, the long-term bond instrument.
Yeah, but when you look at the liquidity story so far, especially in this third quarter, is it going to be more or less the same going to the fourth quarter?
So in terms of liquidity, yes, we see the liquidity from the last quarter. We saw a lot of liquidity drain given by the pronouncement of the central bank bringing back the LGR debit. So we took and CRL debit as well, which took a lot from the liquidity in the market. So that is why we saw a bit of liquidity squeeze this quarter, and we saw our rates actually inching up. But however, going towards the end of the quarter, we saw injection into the liquidity. We saw coupon payment of about 160 billion. We're expecting FAC payment of about 500 billion into the system. And so we expect to see more improved liquidity, and we see the rate actually dropping this quarter. We also expect next month we see about 500 billion from the bond coupon payment, which will also help the liquidity in the system.
All right, now let's get into the market this week. Last trading day of the week, I see that you say you're expecting some repricing to play out in the bond space. Yeah, the market this week. I'd like to get your thoughts on the market this week, starting from the bond space. I see that you're expecting some repricing to play out in the market this week.
Okay, so for this week, we're entering into a new quarter next week, and we also want to look forward to the CBN to decide, you know, the way forward in the market, given the new leadership. So we expect more policies to come up. We expect more information. We expect more pronouncement in the market, which will actually direct the affairs of the market. So, but all the same, the market will actually trade on a cautious note. We see the long-term trading at 16% levels, so we expect the market to actually trade on those levels. But it will come down a little bit because we expected the FAC to come in, but we expect the FAC to come in next week. So because of the increase in liquidity, we might see the yield actually dropping.
Yeah, but how would you sum up trading at the I&E window then?
Yeah, so the I&E window, we have known the trend all the way. We have seen that there is low liquidity in that window. We have seen that the Naira has been under a lot of pressure. We have seen a lot of you know, high demand and pressure coming into that space. We have seen a lot of uncertainties around the FX market. So we expect the market to still be the same, to trade at the same levels. The market is currently trading at 770 levels, 770 to 780 levels, and we expect the market to actually trade at these levels next week. And also, we also expect to see direction from the new leadership from the central bank.